Joining us now, Hubertus Vaeth, Managing Director of Frankfurt Main Finance. Hubertus, good to see you.
It's very good to see you, Tian.
Thank you for taking your time out of your very busy schedule traveling around Asia and beyond. Let me ask you about your latest response toward the policies coming from China, whether it is about boosting the financial market or the real estate sector, as well as the latest financial and monetary policies.
You see, in the beginning, a lot of observers called it too little, too late, but they're getting quieter by the day. I say it's the right mix, beautifully timed. The package actually between the central bank and the government has been unprecedented. It has a volume of 1.5% of GDP and comprises lots of instruments, which I believe will be very effective. So from the early responses of the stock market, you could clearly say it's been a big success. And it's been a very important move. Why am I saying that? Since the beginning of the year, M1, which is the critical monetary aggregate, the monetary aggregate that comprises basically cash and term deposit and demand deposit, this has been in negative territory for a while. And these moves now clearly give such a shift to liquidity in the market that we see a big boost.
We see some of the latest measures certainly make the stock market very excited. For example, the reduction of interest rates and also the reduction of the down payment, for example, and the list goes on. How do you make of the immediate short-term excitement in the stock market vis-a-vis what China has as an aspiration for high-quality growth and transformation of its economy?
Yeah, so of course now it's a liquidity-driven rally, and it's been historic by proportions. I mean, 1 week with a rally of 20%, that's been a very, very rare thing to experience. So, but obviously they have to trickle down. It will be now a liquidity-driven rally, which hopefully will be supported by the trickling down of that impact into growth, into long-term economic impacts. These will take a couple of months to really see it. And when you say high quality, it has to be a massive shift away from a real estate-driven economy to a technologically led recovery, and particularly clean tech-led recovery.
You see the Politburo meeting in China, the end of September, is what, as some analysts say, unprecedented. Usually the Politburo in China, the policymakers, are talking about economy in specific meetings that are taking place in the months of April, July, and December. There were some exceptions, but they were rare exceptions. We see some specific talks of monetary and fiscal measures, as well as stimulus that's likely to take place. Of course, at this moment, we do not know yet many of the details. And according to the Tuesday morning press conference given by China's NDRC officials, there is still a shy of specific numbers of stimulus coming out and being announced to the public. But to you, how do you read, different signs, and how do you see the importance of financial and also monetary policies in addressing the confidence of foreign investors, particularly foreign financial investors like yours?
Yeah. So let me start with the first part of your question. I think it's not a negative that not all policy details have been hammered out. The direction is right. The market clearly smelled that there is a massive impetus coming, and the fine-tuning, well, leave it to the time, leave it to seeing how the market responds, how the actions of the participant in the market are. So I think this period where we see more details is a period of fine-tuning. It is not changing direction. The direction is set right, and it's been a strong impetus. So I'm not worried about there is not clarity about all measures yet. So that's number one. From an investor's point of view, the sentiment on China has been extremely bad. Extremely bad. If you look at and you talk to institutional investors in the last couple of months, I spoke to some of the biggest investors. They say when we come to our clients and we tell the story of China, so basically there is very little interest. China has been underweight, tremendously underweight. So that means we will have a long rally to come if things go right. What do I mean by that? There is a saying in the markets that says, the market climbs a wall of fear. And there is still fear out there. And because of that, the market climb has a long way to go. And to establish the trust and filter these measurements down and to stay the course and stay that course on the impetus of the measurements. That is what needs to be done. And I read from what I hear coming out of China as that it's been clearly understood and it's meant to happen.
A foreign investor, as you just mentioned, has been yet ambitious about the investment opportunities in China. What would eventually bring confidence back? What do you see from your talks with others over the past months will be the key deciding factors?
Some have already moved. I've been in Shanghai earlier this year in June, and Allianz Global Investors, which is the asset manager of the world's fourth biggest insurance companies, decided to step up their operation in Shanghai and China on that turn. So some have seized the opportunity, some have decided to move in. There are a minority yet. So what is it that will change? First, the way I look at it is there is a huge pile of money standing at the side willing to be deployed. Because logically, in terms of economic importance, China should have significantly higher levels of investment. So what are the two things that are important? The number one thing, I think, is to have continuity of policy, to no surprises. This surprise was necessary to change the sentiment, to turn the negative trend around, but now have to build on it, and you have to now have predictability in continuing that path. That's number one. Number two, and that's very simple and very basic, is money that you want to come in, you have to make it easy for it to make money, and you have to make it easy for it to be taken out again, including the profit. So the ease of moving money in and out is it. And then is the last thing, and that is something which I believe probably in the long term is the biggest game changer. It's talent. To understand China, you have to be there. You have to be in continuous exchange. You have to have people being exposed to China to understand it. So the welcoming for talent is something which I believe is having the highest dividends in the long term.
About the green transformation, of course, China is already on the move, but at the same time, we see there is still a huge proportion of power consumption, for example, in China that can still be transformed into green power consumption. So how much will that provide as an opportunity for the financial sector?
Yes, what you describe is clearly the case, but already today, 40% of economic growth in China is driven by green tech, is driven by clean tech. So the contribution is already vast. And if you look at the capacity building in terms of energy, when it comes to renewable energy capacity, it's even over 50% of that capacity is built in China as compared to the rest of the world. So you see massive shift here. And when you say, what does it mean for investors? It means an opportunity.
Now we see competitions among financial sectors or financial centers around the world. And here in Asia, you are now to travel to Tokyo, later to China as well. You see the competition between Hong Kong, Singapore, Tokyo, Shanghai, Hong Kong, Shanghai, and the list goes on. Now, how do you see this very exciting momentum on the one hand, but also the competition, even regionally, among the financial centers? What does that mean to you, who try to create a financial center in Frankfurt, Germany?
Yeah, well, first and foremost, I love that competitive atmosphere. I love these cities because financial centers are vibrant. They're full of young people. They're full of ideas. They're full of energy. Just look at the index. Hong Kong in the world is ranked number 3, Singapore number 4, Shanghai number 8, Tokyo number 20, and by the way, Frankfurt is ranked number 10, which I think is not a bad thing. And if you look at the various financial centers, you see different strategies work out. Hong Kong always has been the gateway to mainland. It was an easy way to get exposure to China. But it has particularly the Greater Bay Area strategy has been, from my point of view, very successful and will give it another leaf of life and another way to go. Singapore has been characterized by a very stable government, a very stable economic friendly policy, very, very educated policy. But even though it's also a gateway, it's a gateway to Southeast Asia, and the neighbors of Singapore are not always friendly to the country. By the way, I think talking to my friends in Singapore, where, as you know, I've been living for a couple of years, they would love the bullet train system connecting Singapore, and they would love to get closer to the mainland China. It's an entirely different story. Tokyo is the society is facing a demographic challenge. It needs to particularly strengthen the asset management industry. It's a big capital exporter, and it's important for them to safeguard the prosperity of society by being effective in deploying the capital accumulated over the year. Frankfurt we have all main Chinese banks located here, which we're very happy. And they're doing good business. I'm in constant exchange with them. And I believe also that there's some deepening of relationships up and coming. It's approximately a year ago that your vice premier, Li Feng, was here, and he signed a close cooperation between Frankfurt and China on financial matters. We will see a lot of more integration between the two financial centers coming out of it. So to be honest, I think we're good positioned in a very, very challenging world. And to say what's been a big boost to Frankfurt has been Brexit. And we have seen 60 over financial institutions bringing in 2,000 billion of banking assets and directly around 7,000 jobs, and in its wake another 30 over 1,000 jobs, increasing its interconnectivity, particularly also with the Chinese financial centers.
The comprehensive qualities of any financial center at a time when globalization rhetorically is being challenged, at a time when businesses are trying to be weighing and balancing their act amid many factors, how to see the most important qualities of international financial centers from someone who's running one?
Yeah. Well, you mentioned lots of them. And if you look at the Global Center Index, it's a vast array of factors, like you rightly said. And it's very hard to nail it down to very few specifics. If I were to mention some, it's tax, it's social security, it's schooling, and it's openness and attractiveness to talent. And openness to attractiveness to talent is how welcoming society is. and how interesting life is, cultural life, how easy life is.
I do want to ask you specifically about China and Germany as well. The comprehensive strategic partnership, we also see pragmatic cooperation between China and Germany, very much high on the agenda over the past decades. Now, we of course, is aware of the complex situation, including geopolitics. So from a financial service center like in Frankfurt, how would you be able to peel off all these complexities and be able to focus on the core of business?
Yeah. Well, we've been blessed that in October 1st, 23, the Chinese Vice Premier He Lifeng and the German Minister of Finance Christian Lindner actually signed the latest agreement between our two countries. And it's been focused on financial services. Forgive me if I'm a little bit tight-lipped on specifics, because my sources eventually would be upset if I would give away. But I can tell you is that it's going very, very, very well, in a sense that we have increased and deepened cooperation in future based on that agreement in October last year. A few days ago, spoke to people from Linde Forklift. Linde is a world leader on forklift manufacturing, and they built their entire production capacity on e-forklifts in China. So it's a massive production site, it's a massive investment. And the financing has been handled both out of Frankfurt and out of China. So two financial centers built a massive capacity there. So from my point of view, there is a lot of common ground to be built and a lot of common ground to be made.
Thank you for your insights and your advice. Hubertus Vaeth, Managing Director of Frankfurt Main Finance. What a pleasure. Thank you so much, sir.